So what I've been doing all this while is just like major price action stuff, how to trade with ranges, understanding ranges, internal, external, blah, 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 right? But next class now, we'll be talking about liquidity. They will be talking about how to trade from liquidity points, even without ranges. Basically, how to trade without ranges. What's tomorrow? Tomorrow is Saturday, right? Saturday. Yeah, it will hold. Yeah, it will hold tomorrow. It will hold tomorrow. So tomorrow, yeah, what we'll be talking about is liquidity and how to trade without ranges. Like how to trade without ranges. And we are going to use ranges actually, but you don't necessarily need trying to like mark your strong high, weak low, blah, blah, blah. That one is another section, right? Which we have explained, which is the simple stuff of things. Now, we'll go to like, this one too is like a simple thing, actually. It's something you guys can do. It's something anybody can do. Say, I even think it's even much more simpler than marking ranges. But so that's why at the end of every day, everything still goes back to the ones you decide to choose, right? So next class, we'll be talking about strictly liquidity, different types of liquidity and all. Because with that one, it will be so interesting. Very, very interesting. So after that, then we'll go to session, right? So after session, so we keep going until we now start going to confluence. Okay, we start going to confluence, blah, blah, blah. Then we start going to normal timing. Shido is not here. Yeah. Once we talk about other block, what is other block, sir? I've talked about this thing, huh? Basically, that stuff does not really matter. What you need is a base. What you need is actually a base, not other block. I've talked about this already. Other block is strictly buy to sell candle. It has nothing to do with your profitability. Market would useless your other block anyhow. But we are going to talk about it. I'm just going to like talk about it. I've talked about it before. You understand? So that's that about that. So does anybody have questions they want me to like address? So that's the purpose of this third session. Since we are going to be meeting up tomorrow. Okay, I should unmute you. Okay. I've done that, sir. You mentioned in the last class that a valid base is an indecision candle. I've explained the three types of indecision candle for you guys, right? I've explained the three types. A valid base has to have one of those three. I've explained that already. Let's say you have a high, low, high. Then as at this guy, you can have your indecision candle at this guy before they took it out, meaning this guy. So this is your base before they took it out. So the mitigation of it is a sell. Oh, I'm not even sharing my screen. Voila. I'm coming on. I've explained that already. A valid base is one of the three types of indecision candle that I explained for you guys. I said the first one, you have your indecision candle like this. Then the next candle can purge away from the indecision candle, then probably even engulf it. All we actually need is this engulfment, this taking out of that eye. Then your other block is what? The indecision candle. That is number one more. So the place that it is located, it can be located in your violation block. Once you see it, you know that you don't need to investigate it. The second one is just indecision candle itself. So this is likely to be one. You won't see a candle at the left. It will just be to stand alone, like what Euro USD did today, right? And the third one is which one? Is the one that what? The indecision candle take care of a particular liquidity to the left, like this. So all these things, they are valid base because indecision candle means consolidation. So for this first one, it simply means a candle came after the consolidation to clear it out, then break structure. That makes this guy a protected eye. So that is what happened here. The second one is when you have an order flow, then you now have an indecision candle that took it out right here. Then it breaks. So that is this second one right here. Then the third one is just strictly indecision candle. So this is if you go and investigate those indecision candle, this is the type 1, the type 2, and just the random one right here. So those are the type. So bro, I guess I have unmuted you already. So you can ask your question though. The Indian guy, I've unmuted you already. Ha, Alade. I've asked you to unmute. I'm clicking ask to unmute. Can you talk now?
Yeah.
Yeah. So what's your question? You said gold, right?
Yes, but okay, let me ask in the Euro USD. In this chart, a bigger, little bit closer. Yeah. Thank you. And then don't.
Bro, I can't hear you. Your network is bad.
Yeah. Can you hear me right now?
Yeah, you need to speak louder.
Yeah. I'm actually not speaking louder because it's actually 2 a.m. in India right now, so that's why.
Okay, so I'm trying to hear you now.
Yeah. Thank you. So my question right now is that you can see an indecision candle in this one, but it didn't came. See, it didn't came. It just took the liquidity and when.
Which one? Okay, this one. That's why I said when it comes
more.
to yeah.
And why does this happen? I didn't understand.
Okay. I explained something to you guys. I said the closest order block to your inducement is what the price would use, right? So now, if you have, I think my network is starting to act up. If you have the high, low, then you have high, then the market start doing this. Let's say you now have another block right here. Let me go and use my board. This is rubbish. So now, let's say you have a high, an order block right here. Or let's say you have an indecision candle right here. Then the market came, creates several liquidity right here. And at the left, you have a high, low, I'm coming. Then the market broke structure here. Then the rally to the upside. I'm coming. So now, this guy, I'm coming. Oh, how would I explain this thing that will really make sense? Okay, now I think I get it. Market is selling. Then all of a sudden, You have another block right here, or let's say decision candle right here. Then market now came here, drop a tiny base, then start doing like this. So now, this is your liquidity. As a result of break or structure, then a pullback. So now, if market, one of the purpose of liquidity is, one of the purpose of pullback is the market to clear liquidity. That is number one rule. Number two is to fill imbalance, which is a sort of an inefficiency in price. But there are sometimes the market will do the both at the same time. But there's sometimes that market would just take out liquidity and not fill the total imbalance. So if I have a tiny base here that is unmitigated, let's say the base is right here, and it is unmitigated right here, and you have your indecision candle right here, market is most likely to get to this base and buy compared to getting to this indecision candle and buy. Why? And how would you do this? If you decide to use this base, you will be skeptical about your stop loss because you will be like, oh, market is supposed to come to this indecision candle, right? But this is now where it gets tricky. This is how smart you can go about it. All you just have to do is wait. Market should react from this liquidity point, get to your base. After taking out this, your liquidity, break structure, then you can buy from here. Not buying from here direct. Because you are skeptical because of the fact that you feel like market is supposed to get to your indecision candle right here. So, but if it has taken liquidity, that is what we'll be talking about in the next class. If you have market create high, low, drop, then it start creating liquidity like this. Once market has taken care of this liquidity, let's say this is your order block. Once market has taken care of this liquidity, it might not get to your order block and it will buy. So our next class is how you would be able to capitalize on this move even without thinking about order block. Because most times, value trade would ignore your order block. And if we can take, this guy is different from this guy. Break or structure, sorry, and pull back. And this is your indecision candle right here. You can see this one, the inducement is very close to your indecision candle. So which means market can use this. But this one, there is a particular candle that violated this structure right here. Market cannot just ignore it. Right? Market cannot just ignore it. So, which now means you guys need to be smart. Now, look at this. This one is close to the liquidity. Market use it. This one is far away to the liquidity. Market use this one. But if market decides to escape this guy, you now have a problem. Let me break it down to you guys. This will be the last question I'll be answering because I already dropped another nugget. Low, high, low, high, low, high, low. Your indecision candle right here. You mark it. Market came. Drop a base. Another indecision candle right here. Before they took out this guy, you mark it. Market now come, liquidity. Pay attention to this last explanation. This is your liquidity. Now you mark it. Now you're expecting this because there's an imbalance here. If market can come here, do this, change character, and buy. This is a very reasonable one. Okay? The second one is anything that now make market get here, it will react. There's no way. Pay attention to what I'm about to say. It is simple and it's the same thing. Market would react, right, from here, then get to this guy that you are anticipating to truly buy from. But bro, for market to have this one and fail it, even though there's a liquidity below it, once you get to this guy, you are now in trouble. This buy is now in trouble because this buy now have a flip zone, or you can call it a trade zone, because this guy is supposed to buy based on our strategy. Now, market reacted from it and it broke it off, which makes this guy what? A violation block. So for a valid sell to hold, this guy needs to come, fail, break structure before you can now say you want to buy from here. Because you can buy from here now, and market will react, get to this guy and take you out. Because this guy is valid. It is a valid swap zone as a result of the failure of this valid indecision candle of this valid base. So it is a threat for you. So which means for this move to be valid, it's either it come here, create new low, but did not take care of this guy, buy. Then you have a new range to trade from. Or it come, yeah, create a new indecision candle right here, then it's buy, which means the indecision candle is your base, your rally base rally. Then you can buy from here. But buying blindly from here, you have to be careful, because once you're able to get in from here, once your market gets here, break even from it. Because market can just turn, boom, take you out, you are out. Because this is a valid trade. Now, do you guys understand that? So for you to, after escaping this guy, market needs to flip it back for your valid buy, because it is a trade zone as a result of a what? A flip zone. Am I making sense, guys? Guys, am I making sense? That is why that stuff, somebody is annotating, you guys should stop. Am I making sense, guys? Once we get to the inducement, which kind of MT5 is this like this? This trading view self gone, just doing like mad person. I'm trying to show you guys something on the chart. So there will be a total class for trade zone itself, and how you can use a trade zone to your advantage, and how you can use a trade zone for re-entries. Because trade zone is always used for re-entry, because they're always responsible for swap zones. I don't even know what is wrong with this thing. You have another good question. I beg, we'll do the question next class. I need to rest. I'm hungry. I really love that question. And you see, that's why I said, when you have a good question, it's going to bring in something that I've not said. Now, I want you guys to see something with me. Let's go to Euro USD. I want you guys to see something with me now. I want to give you a real life example of what he asked and how you can use a trade zone to your advantage if this network did not fuck up, because now network is starting to slow up. Now, look at this. I'll show you what I'm talking about. You have to understand your strategy a lot. That's why I hardly take losses. Most of my trades, instead of it to be a loss, it will be break even. Trust me, it will be break even. Because I know trade zones. I know what needs to happen. I will show you why is this network slow like this. Now, look at this. This will be my last explanation. This network is starting to slow up. Now, at this trade, I bought from here. I bought from here. My stop loss was somewhere around here. Now, I was anticipating that this trade would go at least get to this guy, right? That is my anticipation. You have to be flexible about charts. Now, market started moving. As soon as it started moving, it came down and it started buying. I got in early though. It started buying. Once it take out this guy, what do you think I will do? I will break even. And why? Based on our rule, this is A. This is B. And this is C. Based on this bearish market move, this is A, B, and C. So if I am buying from here, where will be my trade zone? My trade zone will be this indecision candle right here. Correct. It will be this indecision candle right there. So now I will have break even by now. So let's say the market has taken me out at break even. What is supposed to happen? What is supposed to happen now is, even though I don't want to take that unnecessary loss, I am stopped at break even. So if this market really wants to buy, they will take out this trade. I mean this trade zone right here, like this. So when that trade zone is being taken care of, I can confidently buy this retracement. All I just have to look for is, where is the liquidity inside here? Then I would expect the retracement to trigger the liquidity. Then I'll buy, because I know that my trade zone has been cleared. That was why when I drew the diagram here, I drew it that this guy needs to be taken, because this trade zone right here is still there, because we know that if we want to follow the bearish order flow, we would have sell from here. But because my bias is bullish, I need to consider that the selling from here is now a trade zone for me. So I have to flip it. So which means as soon as market get to the trade zone, it's either I edge. Once we get to edging, it's either I edge or I take partials. No, it's either I edge or I break even or I take partials. So that's the three things I'm likely to do. It's either I edge or I take partials or I break even. But once we get there, we are going to cross it. I guess I am cleared a little bit. Am I clear, guys? So that will be that about that for today, guys. So thank you very much. Thank you for coming. God bless you all. Thank you.